So the big question is this: how do investors like us who trade options and manage our own money generate income regardless of where the stock market goes, and do it all in a way that lets us make time for the people and things we love, and yet still build wealth and remain profitable? That's the question, and this podcast will give you the answer. I'm your host, Kirk Duplessis, and you're listening to The Daily Call from Option Alpha. Hey everyone, this is Kirk here again from Option Alpha, and welcome back to The Daily Call. Today we're going to answer the question, do you need to own 100 shares of stock before trading options? The answer to this is absolutely and 100% no. You do not need to own shares of stock, whether 100 or 1 share of stock. It doesn't matter. You do not need to own shares of stock before you can trade options. Now, what most people think about when they start transitioning between stock trading and options trading is they think about a covered call, which a covered call does require that you own 100 shares per 1 call option that you sell. But in many respects, what you can do is you can trade options without owning the underlying stock or shares. Now, this is a really cool feature of options trading, in my opinion, because it reduces this high capital threshold to be able to get into different positions and different ticker symbols. And it also allows you to more appropriately manage your risk and adjust your positions. So with trading options, you have the ability to buy and sell spreads or to buy and sell individual option contracts, which are a much better means of controlling your risk and potentially building different payoff scenarios than if you were just to own individual shares. Now, a lot of people get hung up also on this concept that when you trade options, you have this enormous risk of being assigned or exercise the contract. We've gone through this in many different podcasts on the weekly show, but this idea around exercise and assignment only really pops its head when you get closer to the expiration, and only then if your option contract is deep in the money. So for many traders, even though you trade options and you could be selling or buying contracts in or out of the money, it still doesn't necessarily mean that you're always going to be assigned and have to deal with the shares. Yes, it can happen. Yes, it probably will happen at some point, but those instances are far and few between. In our trading, when we go back and track all of our assignments that we've had over the last 10 plus years, less than 1% of the time are we actually assigned shares. So like I said, it happens very, very small percentage of the time. It's a manageable expectation that you can work around. And it's something that you don't need to worry about necessarily as you get started into options trading. So if you have any other questions, please let me know. And until next time, happy trading. Thanks for joining us on The Daily Call. Be sure to subscribe right now for more daily options trading ideas, strategies, and tactics to help you learn how to place smarter, more profitable trades. And if you like what we're doing, don't forget to give us a rating and a review so we can continue to bring you the best daily content possible. We'll see you again tomorrow, right here on The Daily Call from OptionAlpha.com.